Our speaker today is SIBF member Randy Knuckles, partner at Denton's Law Firm in Washington, D.C. Randy was a member of the SIBF class of 1983 and is a former SIBF chair. Randy will be discussing the CARES Act major provisions for small businesses and nonprofits. We will have a Q&A session following Randy's remarks. I'd like to remind everybody to please click on the Q&A button that is at the bottom of your screen if you have a question. Do not click on the chat or raise your hand or any of those. You can talk to other people if you want to through the chat, but if you have a question, please make sure you click on the Q&A. So with that, I'm going to turn it over to Randy. Welcome, Randy.
Thank you, Nancy, and hello to everyone. We're all learning to utilize online chat rooms and Zoom and Blue Jeans and WebEx and other services that we're all learning to utilize to stay in communication. I would prefer that I could see everyone like we have been doing on some of our other SIBF programs, and I look forward to seeing some of your faces, hopefully maybe on Friday when we have the SIBF happy hour again. The first one, some of you were there, and it was a lot of fun, and I look forward to talking to some of you again on this Friday. And looking at the programming, I was asked by our SIBF staff about the Paycheck Protection Program and other small business assistance programs that were included in what's called the CARES Act. And I said I agree that I would be willing to make a presentation about those programs. It's pretty much all that I have been working on in the last few weeks, making presentations to both nonprofit groups, national trade associations, different types of groups, large groups, 600 or 700 people at a time, or smaller groups. So it's something that I didn't know much about until recently, but I've learned a lot of details. And so I thought I would like to share some of that with you today. Blake, if we can go to the first slide. The bill that it seems like an eternity ago, but it was really only about 10 days ago, that what is called Phase 3 of congressional action to provide economic stimulus and assistance during this COVID-19 pandemic was approved. It was approved by the House of Representatives and signed that very afternoon by President Trump. It basically is a $2 trillion package with some additional monies that would go through the Federal Reserve for supporting the economy. Just as a refresher, it provides it, and you've seen all of this in the news, but the $1,200 per individual, $500 per child to all Americans that are in the IRS database. You'll either get if you're hopefully not too many of our SIBF members may qualify because it's capped out at $75,000 per an individual and $150,000 for a joint return. But nonetheless, it will be very helpful to many, many millions of Americans through either electronic transfer or a sending of a check. Other provisions there were, of course, the expanded unemployment compensation. Unemployment compensation goes to individuals. You've seen the news about the very staggering number of Americans who are applying for unemployment compensation. That's a program that goes through each individual state, and an individual has to go to their unemployment office or apply online through their individual state unemployment compensation program. Blake, let's go to the next slide. What we want to talk about primarily today are the provisions that were approved in the CARES Act to assist small businesses, and the one that is getting so much attention is called the Paycheck Protection Program. That was $349 billion in loans for small businesses, nonprofits, sole proprietors, and independent contractors. Small business is designated as 500 or less employees, or there are some additional size standard qualifications that certain industry sectors might qualify for more than 500 employees if it's set forth that way in what are called the size SBA, Small Business Administration size standards. Also, the hotel and restaurant industry was given some leeway to say that they could qualify for the Triple P program even if they had more than 500 employees, as long as they had no more than 500 employees at any one location. It is a program that has already have been heavily subscribed by applicants trying to submit. And as you've seen in the news just yesterday, Majority Leader Mitch McConnell and Kevin McCarthy on the Republican side in the House and Chuck Schumer in the Senate have all said they want to try to expand that program with additional legislation, in fact, this week. And last night, the OMB director on behalf of the White House submitted a letter to the United States Senate asking for an additional $251 billion, which would take that program to $600 billion. The Senate hopes to meet tomorrow in a pro forma session, or they are scheduled to meet tomorrow in a pro forma session. It is the leaders' hope that they can pass this additional funding by unanimous consent. The House is scheduled to meet on Friday, and we will see what happens in the House. If you remember when the CARES Act was passed 10 days ago, we had at least one House member that objected to a unanimous consent vote, and so they had to call members back to establish a quorum so that they could have a vote. Now, what is developing today in Washington, it was just released a couple of hours ago on the House side in Congress, is the majority, or the Democrats in the House, want to add some additional language into the Triple P program and the additional funding programs to make sure to add another large amount of money to help smaller cities and counties that some fear are going to not get their fair share of funds that was previously approved in the CARES Act for local governments, and also to make sure that smaller businesses and smaller community banks get their fair share of the $600 billion in small business forgivable loans in the Triple P program. So there may be a possibility of a kind of a ping-ponging back and forth between the House and Senate to see if they can resolve the differences between what a very streamlined bill that Leader McConnell would like to pass and the White House would like to see adopted, and the additional provisions that Democrats in the House of Representatives would like to add into the next legislation. That's not too much different from what occurred in the CARES Act, as you recall, as it went back and forth about what would finally be in the CARES Act. The unique part about the Paycheck Protection Program is while it's for small businesses, you do not, as typically the case, you do not go to the Small Business Administration to obtain your loan. Delegated authority is given to the banking system, to banking entities, to make those loans directly, so the borrower goes directly to their local bank if they have a banking relationship. It's a very streamlined requirement in terms of no collateral and no personal guarantee that has to be given by the borrower. Blake, next slide. To calculate your maximum amount of loan, if you're a small business that qualifies or a nonprofit that qualifies, meaning a nonprofit, a C3 charity, in this case, a C3, then you do a look back of 1 year, or you now can use your 2019 payroll cost. There was a Monday night about 11 o'clock, they posted some new frequently asked questions on the Treasury Department website that clarified quite a number of questions that people were asking. But so if you are interested in applying for one of these forgivable loans, then you would calculate your yearly average, your yearly payroll cost, and come up with a monthly average payroll cost using either 2019 payroll records or 1 year back payroll records looking from April back to April of 2019, whichever you prefer. You included in the payroll cost are all salary and wages, all payments of any kind, benefits for your employees, severance payments, any payments you had to make on state and local taxes that were assessed on the compensation of your employees. There is a $100,000 cap per employee. Any compensation salary above $100,000 would not qualify to be added into the tabulation of how much you are eligible to borrow under the Triple P program. That was just clarified on Monday night as well, that for some time it was uncertain whether you had to include your benefit package that you provide an employee underneath the $100,000 cap. It has now been clarified that the $100,000 cap only applies to basically cash wages or salary, and benefits are calculated and added separately. You do not include payments to independent contractors where you might file a 1099 tax form. That independent contractors are eligible in their own right to submit for a loan application to a local lender. Next slide, Blake, please. These loans that are made are forgivable by the government. Basically, the government will stand in after the loan period and repay the bank, and the share of your loan that you obtain that is qualifies as forgivable will be wiped off the books and no longer a part of the loan. You utilize the loan proceeds, and I would say I didn't mention that the maximum amount of a loan is either $10 million or your average monthly payroll cost times 2.5 or 2.5 times your average monthly payroll cost, or $10 million, whichever is less. In determining loan forgiveness, you can spend the loan proceeds over what is called the covered period, which is the 8 weeks after you receive the loan. And that must be utilized for payroll costs, rent, interest on mortgage, or utilities. And there was a change that came out late last week when they released what are called the interim final rule, or the regulations that were published in the Federal Register from the Small Business Administration, that this was not in the statutory language, but it was in the regulations when they came out late last week, that said you cannot spend more than 25% of the loan proceeds for purposes other than payroll and still have that amount forgiven. So you would need to limit your loan proceed expenditures for rent, interest on mortgage, and utilities to 25% or less if you want it to be a forgivable loan. The loan forgiveness is also reduced proportionately if an employer reduces the number of full-time equivalent employees during the period from February 15th to April 26th. And you can still reclaim full forgiveness, if you will, if you add back employees by June 30th. Any portion of the loan that is not forgiven after the June 30th period, or after the 8-week period, assuming that your 8-week period, I suppose, ran beyond June 30th, if you got a loan, say, in May, then you would work with your lender and you would calculate the amount of the loan that was forgivable based on your records that you submitted to the bank that showed that you used the loan proceeds for forgivable purposes. That would be then within 60 days qualified to be forgiven, and it would be wiped out of the loan. The remaining amount of the loan is still there. Say you utilized 80% of the loan for purposes which you qualified for loan forgiveness. You had 20% of the loan still remaining. That loan would accrue from the date the loan was obligated in April or May, whenever that might have been, at 1% interest, and it's a 2-year loan. But there's a deferral on payments. You do not have to make any payments on the loan until January 2021, and you can prepay the loan without penalty at any time. So even if you did not have complete forgiveness on this loan from the bank, then you still have a very low interest use of loan money with a payback period of 2 years. I would emphasize proper documentation is required, and before you, although the bank is not verifying your information other than basically to determine that you've done your calculations properly. And the bank is not requiring, as I say, no security and no personal guarantee. They do then get approval from the SBA, and they can make the loan to you. I think one of the banks, I guess one of the large banks, Bank of America, said they've already approved a couple of about 200,000 loans, totaling about as much as 80 something billion dollars already. Although the money may not be in the hands of the small businesses yet. After documentation and after the borrower after you provide documentation to your bank, you do have to, when you apply for the loan, certify that the uncertainty of economic conditions right now because of COVID-19 makes it necessary for you to ask for the loan to support ongoing operations. That has been a sticking point for some entities who say, well, how do we know we can certify, because a false statement or any kind of inaccurate statement might subject us to penalties down the road. And I would just say that there's not a lot of documentation yet or explanation yet about how you justify the necessity of requesting the loan. I would only caution that if you can look at an auditor in the eye 2 or 3 years down the road and say, yes, we absolutely needed this loan money to support our ongoing operations during the height of the pandemic, then you want to be able to certify at that time. Blake, let's go to the next slide. There were tax changes in the CARES Act. Most of you may have seen those. An employer can defer the payment of your payroll taxes to the government for the six-month period from now until the end of 2020. If you would, instead of sending the typical Social Security tax withholding on your employees that you would send to the government, you can defer that until the end of this year. You pay 50% of that back by the end of 2021 and 50% of that back by the end of 2022. You cannot take tax deferral on your payroll and also engage or apply and be awarded a loan, a forgivable loan under the Paycheck Protection Program. There is, however, no statement in the tax provisions regarding the need to justify why you were taking the deferral. So it may be a little easier effort by an employer to go ahead and do tax deferral than it might be to apply for the PPP program. Likewise, there's a refundable tax credit that you can take on payroll up to $5,000 per employee for businesses and nonprofits whose operations were fully or partially suspended. And that is available for wages paid or incurred from March 13th until the end of this year. So that's a refundable tax credit where you would actually get the cash back if you had to dispense with your operations or lay off employees. That is also not available if you take a PPP loan. And then for SIBF members who want to be generous during this time, a difficult time for many nonprofits, charities, I would encourage you to look at the charitable deduction changes that were made. If you are taking a standard deduction, you can add $300 above the line as an additional deduction on your income tax obligation by giving to 501c3. Likewise, if you itemize, then you can increase the amount to 100% of your charitable contributions rather than just a 60% of AGI limitation that's there for individuals. Likewise, there's an expansion of the ability of corporations to give to charities during this period. So I would encourage our SIBF members to think about the charitable opportunities that have been, the incentives that have been provided in the CARES Act to encourage you, either as an individual or a corporation, to give additional funds to qualifying charities during this difficult time. Blake, let's go to the next slide. I'm not going to really dwell on these. You can we can post the slides if you would like to see them. But phase 2 of the congressional action included requirements for employers to do certain things with paid sick leave and provide funds there for, or the right for employees to take sick leave for themselves or for caring for a family member. Next slide, Blake. And then there was also some family leave provisions in phase 2 of the act. And then finally, you can read these or you can get those. Finally, let's go to the SBA's Economic Injury Disaster Loan Program. This is a program that has existed at SBA for natural disasters, hurricanes, tornadoes, that kind of thing. Most every state in the country has been designated a disaster area because of COVID-19. This just means that a small business and nonprofits with fewer than 500 employees, sole proprietors, and independent contractors can apply for an SBA Economic Injury Disaster Loan, an EIDL loan. You can get up to $2 million for working capital. It's on a 30-year term. 3.75% for a for-profit entity, 2.75% for a nonprofit. Payments on that loan would be deferred for up to 1 year. The loans are going to be made based on credit scores, no tax returns required to be submitted. The first $200,000 would be available without a personal guarantee, no collateral for $25,000 or less, and just a general security interest would be need to be provided by the borrower, no real estate as collateral on these loans. There is, as a part of this program, a $10,000 emergency grant that can be provided, and it's supposed to be provided within 3 days, and it does to a small business that qualifies, and it does not have to be repaid. It's basically a grant that does not have to be repaid. Funds from this program can be used for purposes beyond payroll, rent, utilities, and interest on the mortgage. You could have a PPP loan, a forgivable loan, and an EIDL loan from small business, but you can't use the funds for the same purposes. So you could, though, for supply chain disruption, other disruptions of your business, cost of equipment, facilities, renovations, other things that would be attendant to your business, you could apply for, if you can certify that you've been harmed by COVID-19, your revenues or your business operations have been harmed, then you can apply to the Small Business Administration for an EIDL loan. If you should get an EIDL loan first, and then you can refinance it underneath the PPP program and take advantage, I guess, of the lower interest rate on PPP loan, although you must remember that it would be on a 2-year loan rather than the longer 30-year loan. Both of these programs are generally pretty advantageous for small businesses right now if you can document the need and you are less than 500 employees. If you should get an EIDL grant of $10,000 and then apply for a PPP loan, then that would reduce the amount of the PPP loan by $10,000, the maximum that you could obtain. I think that's the last slide, Blake. And so I will stop there, Shannon, and see if we have any questions. And I would love any questions or comments from our SIBF members.
Great, thank you for that presentation, Randy. And just as a reminder, if you do have a question, you can go to the Q&A icon on the bottom of your screen and ask a question. The first question is, how does the loan program work for sole proprietors, such as a real estate agent? who only have themselves as an employee or an independent contractor?
Well, the documentation for a sole proprietor is going to be different if you go to the Triple P program. You're going to have to show tax records lost over the prior year, amount of income, and you are eligible for the program. That actually, for sole proprietors and independent contractors, the program opens on the 10th of April, so they have not been eligible to apply yet. But the first week was for small businesses and nonprofits. The second week, opening on April 10th, is for sole proprietors and independent contractors. But there is documentation that you will have to submit to the bank to justify the loss of revenue that you've had and be eligible for the loan. Now, if you look at the bottom of the slide that's up currently, you will see a link to the Treasury Department page that has all of the information, including the most recent release, which was the FAQs that were released Monday night. I would say also there is a loan application form there that you can look at and see what the certifications are, see the what is needed in the application to submit to a bank. Some banks are developing their own and are allowed to develop their own application form that they want customers to submit online, as long as they don't ask for information beyond what the government has specified needs to be provided. So the example at this link is an example of the OMB form that was developed to share with banks as meeting the requirements of the type of information that was needed.
Great. Second question. I'm the CEO of a venture-backed startup with less than 500 employees. Is my startup eligible for a loan under the program?
There's a complicated set of affiliation rules that applies to venture capital firms. There's actually got some guidance on this link about affiliation rules that came out on Saturday, I think, this past weekend. I would encourage anyone who's in private equity to look at those provisions to see, because in the case of venture capital investments in multiple entities, there may be an affiliation that might take them beyond the small business qualification standards. It all depends on what else the venture capital firm is invested in, and also how much control you may have over multiple entities. So I would encourage you to go look at those guidelines and look at generally at the SBA affiliation rules.
Is any portion of the loan that is used for payroll during the 8 weeks going to be forgivable if used to pay 1099 workers, even though the 1099 was not allowed to be used in the loan calculation? Must it be used in the 8 weeks?
Well, yes, you could use the money. Yes, you could use the money to pay a 1099 worker, but it wouldn't qualify for loan forgiveness. You will have to document how you use the loan monies during the 8-week period after the loan was obligated, and payroll monies spent on paying employees that are not part of your payroll structure that qualified you for the loan would just be amounts that you couldn't get a loan forgiveness on, but you could utilize the money. You would just have some remaining loan to pay back at 1%.
Okay. What is the approval process if you apply for a disaster loan? How will you know if or when it is approved? Will you be notified if the application is missing needed information?
The SBA has a tremendous challenge right now. They were provided, in fact, in this bill that's being discussed about being voted on tomorrow and Friday, there's another 200, a large amount of money going to SBA for the financing of these loans, I suppose, through the Triple P program. But if you're talking about the EIDL program, they receive money to hire additional staff, but no doubt it is a challenge because they are getting loan applications for the emergency loan program 10 to 20 fold more than they've ever processed in a single year. And now they're getting that many for now in the last month. So it is a major challenge. I think Secretary Mnuchin and the SBA administrator, I think, were with President Trump at the White House last Friday at the daily press conference at the White House, and they were trying to explain how they were going to stand up the program. And they admit it's a major challenge, but they hope to get it done. So how quickly you would get approved, I do not know. They might come back and ask for additional information. Yes, they might. And so work with your regional office, SBA, if you're submitting for a disaster loan, and try to document your request as precisely and accurately as you can to help facilitate as expeditious a review as possible.
Next question. I had an M&A deal in process with the company. The deal was put on hold. The seller is applying. If the deal goes through prior to the 2 months, is there an issue if the buyer, stock purchase, is larger than 500 employees? Additionally, since this is a stock deal, we would want to avail ourselves of the forgiveness, but the deal may happen prior. Any thoughts on any potential issues here?
That's a complicated question, and I don't want to venture a specific answer on that based on no more that I know. But the seller, if the seller qualified, I do have one client that I've been working with where they have an older SBA loan, and they were asking the question, does that in any way interfere with, and they also were clearly at that time below the SBA small business size standard, so there was no issue. I think you probably need to confer with your legal counsel, but I would think if the seller qualifies now and it's on hold and they get the loan, and the loan proceeds are spent in the next 8 weeks after the loan was obligated, either you would have a partially forgivable loan that would be part of the asset transfer, I suppose, from the seller to you, or you would have a loan that hadn't been forgiven at an interest rate, low interest rate, that would have to be repaid within 2 years. But that is not official legal advice at this point. I don't know enough.
Is there a selection criteria used by the banks? We applied early, and then we were told others were being served first.
Some of the banks, if you followed this over the weekend, Bank of America stood their program up pretty quickly. Wells Fargo didn't start until Saturday, and then they were they're under some Federal Reserve restrictions, and $10 billion is all because of their past behavior that was penalized by the Federal Reserve. They were under a $10 billion cap. Now, just today, the Federal Reserve has announced, this afternoon, they announced that they would be providing Wells Fargo some relief from that $10 billion cap to the extent that they make loans under this program, specifically to small businesses or the or other programs that have been authorized in the CARES Act, use of proceeds for other things in the CARES Act, primarily the Triple P program. So, and then other banks didn't start. JP Morgan Chase didn't start immediately. So you've heard different anecdotal stories about how the banks are dealing with it. Some banks were only, I think, because of the Wells Fargo restriction on the amount of loans that they could make, they were only accepting applications from existing banking customers who had a loan or a credit card with them, and that came in for some criticism that they would be leaving out many really small businesses. So it is still a work in progress with the banks. They were seeking additional advice from Treasury about their risk assessment and about any of their, but they're basically being held harmless in this process. And within 90 days after the end of the loan period of June, they will get their money back from the Treasury, and they get a fee for processing all the loans. Based on the size of the loan, it's a different stair-step rate, but it's a different fee structure depending on how much each loan is. So they have the opportunity to earn interest, to get the fee, and then to get their money back, I guess, for turning around and potentially making other loan lending decisions down the road. But there's very little, and the certifications about whether a borrower qualified or not, they are held harmless from those certifications. And the Treasury and the Federal Reserve will have a process for buying their loans, basically a secondary market for buying those loans immediately after they're made. So there's quite a number of provisions to make it facilitate and make it attractive to the banks to participate. But there's still a lot of I would just encourage you, if you're having trouble with your individual bank, it only makes sense to me, human nature, that bankers are they're conservative by nature, but they're also going to deal with their customers that they already have a trust relationship with first in the queue. And so I would deal with whoever you already have a satisfactory and good banking relationship with.
What about Truist? Do you think the BB&T merger might have slowed them down?
I don't know. I really haven't seen a lot in the media about Truist and how they are dealing with. I did have one small nonprofit in Georgia who was thinking of going to Truist, and Truist told them unless you do your payroll here, unless you have your payroll banking with us, we wouldn't accept your application.
Okay. Is there a downside to applying for the CARES program? Are there any repercussions?
Are there any downsides to applying to the program?
Yeah.
I don't see a lot of downside to applying to the PPP program if you have can legitimately claim that you have the economic uncertainty in the economy right now is having an impact on you, and it could be supply chain impact. It could be that you felt compelled to furlough employees. It could be that you certainly have less revenue. Even nonprofits. I've done a couple of these webinars for large groups of nonprofit entities, and if they are facing less revenue, either because they have programming, say the Atlanta Symphony or the Atlanta other performing arts or the museums, they certainly have lost revenue. Or if a nonprofit has an annual fundraising drive or a fundraising gala, for example, where they receive a big portion of their revenues, and they're not going to be able to hold that event, a golf tournament, any kind of a gala that makes money for the organization, that to me seems like it is affecting their ongoing operations and their revenues. You don't have to show that you're drawing down all of your reserves to be able to certify that the economic uncertainty is affecting your operations.
Great. Last question, and then we'll ask Blake to let everybody know where they can get copy of your slides. But Randy, what do you think are the best resources for getting additional information?
Well, this link that's up right now is as good a resource of all the um, official documentation from the government. I will also say that the U.S. Chamber of Commerce has had some pretty good. I participated in a presentation last week with a chamber executive. I guess we were speaking to the North Fulton Chamber of Commerce in Atlanta, and I know they've had as good a chart, kind of a work step by step on how you calculate a triple P loan in their small business kind of handbook that's online at the U.S. Chamber of Commerce. If someone on this call wants to email me, I can send you plenty of Denton's information that we've client alerts and things that we've sent out. But there are quite a number of sources out there for obtaining information about the Triple P program. Just be careful that you're getting the latest updated information, because some of this, we're on the third version of the loan application form that has come out since all of this was passed into law. We are on these FAQs, as I said, that really were helpful, came out Monday night about 11 o'clock and posted on the Treasury Department website. They have reserved in particular in the rules that were posted, the regulatory rules in the Federal Register. They did include in there a statement that on the loan forgiveness aspect of this, they basically anticipate that they will be providing additional guidance, just as they provided a second round of guidance on the affiliation rules for the Small Business Administration. So I would continue, and this link that I have put on this slide is continually updated. So this, every time when I go look at this once or twice a day, I sometimes have found new information on the Treasury Department link. And any of the groups like the U.S. Chamber or other organizations are trying to keep updated information. And then I would say, finally, stay tuned. Even if you're not a small business, the next tranche of money, there's the other pot of money, $500 billion, that was approved in the CARES Act, that is going to, some of that was earmarked for the airline industry and critical industries, about $17 billion. But the rest of that $500 billion is to go to mid-sized companies of more than 500 employees who need to apply for loan money. The details of that program have not come out. It's you may have seen the reference to what's called the Main Street lending program of the Federal Reserve. Secretary Mnuchin has said that the Treasury Department will not be lending all of that money via the Treasury Department, but instead they will be standing up what they've called facilities where the Main Street lending program would be administered via the Federal Reserve System. And so stay tuned for information on that program, which should be coming out soon. They released on Monday the 6th some information for the airline industry, but the rest of the money has not been, the details of how you could obtain some of that money if you're not a small business but a mid-sized business is still to be determined.
And I actually did have one other question come in, Randy, that I'll squeeze in before we turn it over to Blake and Nancy. Okay. Also, another member asked if the recording of this presentation will be available to SIBF members. The answer to that is yes, and Blake will tell you about that. So the question is, Capital One is my bank. They continue to state that they are not up and running yet and will only take applications for their business clients. If I'm a sole proprietor and do not have a business account, but I do have a regular account with them, will I still apply to them, or do I need to go through someone else?
Well, the government is not mandating that banks participate, nor are they mandating how banks participate. So if Capital One, just as I said, Wells Fargo was only taking applications from certain categories of customers. Capital One may do the same thing. Now, sole proprietor program is not even, they couldn't have opened that program yet because it's not the statute said it would start, and the regulations said it would start on the 10th of April. So that's this Friday. The reason that Congress is coming back into kind of an emergency, hopefully unanimous consent kind of mode is to approve another $251 billion for this program so that it doesn't run out of money. And part of the concern particularly has been that independent contractors, sole proprietors, really small businesses that don't have big accounts at big major banks might somehow be left out of this process, even though that's who a lot of the politicians wanted to be sure they were helping. So I would just encourage you, Capital One, I would continue to ask them, but you may have to go talk to another bank as well, a small bank of some kind.